However we look at it, it's a huge week for the global economy and a huge market focus on Wednesday.
Welcome to the long and short of the week ahead, a production of Eurizon SLJ Capital that takes a look at the macroeconomic themes of the week ahead and has been recorded for professional investors. My name is Matt Jones, Head of Distribution for Eurizon SLJ Capital, and I'm joined today by Neil Staines, Senior Portfolio Manager. Welcome back, Neil. It's great to have you here with us.
Thanks very much, Matt. It's great to be here.
Now, the UK has been in the headlines this week with European defence negotiations, auto tariff response considerations, and of course, the spring statement. I'm not sure where you want to start there, Neil, but over to you.
Thanks very much. Yeah, absolutely. It's been a very big week for the UK. And now we discussed the budget, the spring statement in more detail in this week's blog, but essentially it was all but a minor tweak, albeit potentially politically unpopular even within the party. Now that leaves a very narrow path to maintaining the fiscal rules, and we do expect to hear more from the Chancellor in the autumn, potentially with further tax rises. More broadly, our focus this week will be on the link between the fiscal and monetary responses globally. In developed markets, we see US fiscal consolidation, that's certainly counter to consensus expectations of unchecked further fiscal expansion, combined with continued disinflation and growth moderation, and ultimately that leads us to a path of lower rates, certainly greater than the market currently expects over the next couple of years. In Europe, recent significant fiscal expansion likely leads to a less activist ECB. It may be too early, but even potentially April is now a closer call. Next week, we also get the ECB minutes on Wednesday, so we'll get a further insight into their thinking there. And the all-important Eurozone CPI print for March, that also comes out next week. Now, intra-Eurozone, it's not clear to us that the increase in defence spending is a positive for the debt and growth dynamic, and spreads are very much worth watching in that regard. But in the UK, at the time of the October budget, we stated that we thought that the fiscal expansion that was created would likely feel like a tightening at the consumer level. And we still think that, and that makes it a very complicated backdrop for the Bank of England. Ultimately, we see a weaker economic trajectory being dominant, and therefore the Bank of England cutting rates at faster than the pace that the market is currently pricing through 2025. Next week, we also hear from Christine Lagarde and Philip Lane at the ECB, and the Bank of England's Megan Green. So there are plenty of parts to put together that fiscal and monetary narrative.
And how about more globally? We're expecting a lot of global economic data next week. So what are you going to have your eye on?
Absolutely, yeah, thanks, Matt. We get plenty of data next week across the board. On Monday, out of Japan, we get industrial production and retail sales. They'll be very closely watched in terms of Japan's progression towards a sustainable level of inflation around the 2% level that frees up the Bank of Japan to hike rates further. In the week, we did have a summary of opinions from the March Bank of Japan meeting, whereby members maintain the desire for further hikes in rates if the economic outlook is met, but also highlighted risks and uncertainties in the global economic and geopolitical arena at the current juncture. In China, we get manufacturing and services PMIs next week. Markets are very keen still to gauge the trajectory of private demand and consumer confidence as China's measures to inject support work their way down into the real economy. And in Australia on Tuesday, we also get the RBA policy meeting, expected unchanged at 4.1% there. Inflation has been surprising to the downside recently. A general election has been announced for May the 3rd, and trade uncertainties and China demand weakness continue to weigh on the Aussie, all skewing negative for Aussie rates, but unlikely we get action on Tuesday.
And of course, April the 2nd will be upon us very shortly, so I suspect that the US and tariff intentions will again be the dominant factor next week. What are you going to be looking out for, though, specifically in the US?
Yeah, absolutely. It's a huge week for US data and for policy. On the data front, on Tuesday, we get JOLTS job openings and US manufacturing ISM, that manufacturing sector was highlighted in the recent PMI data as being particularly weak, so we'll watch out for confirmation of that there. On Wednesday, we get the ADP, the private sector precursor to payrolls. On Thursday, we get the trade balance, and this week's advanced goods data suggested that there has in fact been a significant amount of front-loading ahead of those proposed tariffs, so that's also something that's worth paying attention to. Also on Thursday we get ISM services. Now the PMI equivalent pointed to something more of a stronger rebound, so we'll be looking for corroboration or else there. And then on Friday, it's that all-important payrolls. Markets are looking for around about 120, with an unemployment rate ticking up perhaps to 4.2% and adding pressure to the FOMC. All very important, but the overarching focus, as you allude to, Matthew, is going to be for markets on Wednesday. It's the announcement of reciprocal tariffs from the US administration. This has huge implications for global trade, global GDP, global capex, and global economic sentiment. Finally, the week will be rounded off, or calmed down maybe, by a keynote address from Fed Chair Powell on Friday afternoon. But however we look at it, it's a huge week for the global economy and a huge market focus on Wednesday.
Fantastic. Thank you, Neil. A huge focus next week indeed. In the meantime, though, we have the weekend. What are you going to be keeping your eye on?
Absolutely. It's a relatively quiet weekend this weekend. Formula One takes a week off between China and Japan. We're still a small wait until the US Masters on the 11th. We do have football after a long international break. It's FA Cup quarter-finals, Fulham versus Crystal Palace and Brighton versus Forest on Saturday, and then Sunday sees Preston, Villa and Bournemouth against Manchester City. But set against that slightly quieter backdrop, it looks like we may be in for some unexpected sunshine in the UK. Perhaps fittingly, at least until Wednesday.
That certainly is good news. Thank you, Neil, for joining us and outlining your thoughts on the week ahead. I look forward to catching up with you next time.
Thanks very much, Matt. It's been a pleasure.
Thank you for joining us for the long and short of the week ahead. Further insights are available on our website, EurizonSLJCapital.com. We look forward to you joining us again next week for more insights into macroeconomic events and the long and short of the week ahead. Information, data and views were accurate as at the time of recording. The views expressed by presenters are their own and do not necessarily reflect those of Eurizon SLJ Capital, Eurizon Capital, or the Intesa Sanpaolo Group. The information and opinions contained in this recording are for information purposes only and do not purport to be full or complete. The recording is directed at professional investors only and is not intended for and should not be relied upon by other investors. The information in this recording does not constitute an offer to buy, sell, or the solicitation of any offer to buy or sell securities or any derivatives.